Williams FX channel. I've been getting a lot of questions on how I get my Fibonacci levels, and it's exactly what I want to show you guys in the next 1 to 2 minutes. All right. So we know that the market is either on an uptrend or on a downtrend or on a sideways movement, and there is something about the downtrend that makes us understand that the market is actually on a downtrend. We don't just guess. So when you have a downward movement just like this, we are sure of that because the market is making higher, lower highs, lower lows, 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 and then the next lower high is higher than this, trying to tell us that there is possibility that there has been a change of trend around this spot because the lower high, the new lower high is higher than the previous lower highs, okay? And we can see how it's trying to work on the 200 EMA. I'll just take that out. So now I'll be looking to calculate this retracement with my Fibonacci, and we use extra Fibonacci levels because we want to use those areas as our take profits. All right. There are different types of Fibonacci levels that you can add depending on your preference. But my personal Fibonacci level for my basic trades are taken like this. So we have our level where the market started pushing up from right here up to this point. So I have my 100% right here, and I have my 0% up here. If you double click on it, you have your Fibonacci retracement parameters right here. You can change the color, which is this. You can remove the trend line. There's a trend line in between there, the trend line here, and you can use it to calculate the trends. And also you can easily add your levels. So I removed this to 0.23 here because it's actually not necessary for me. That's 3%. It's actually not necessary for me because I don't pick levels there. Sometimes I want to take out my 50 level, take out my 50 totally because I don't really take my retracements off 50 anymore. But you can add that for beginners, you can add that, but it's not necessary because the market actually now retraces more at 61.8 or at 78.6. At those points, you could use very small stop loss because anything that will make the market go beyond 78.6, it's about to either manipulate you or take you or change our trend. So you don't want to let your account do all that manipulation. You just want to take 10, 15 pips max off the market, okay, on your stop loss. So, and then I have 2 extra levels that I named myself. So this one I added a negative, and this one I added a negative. So this one will appear after the zero level, minus. So I have my minus 23 and my minus 38 right here. And you can add minus 50 if you want to. So, but I don't have that because I use mostly take profit 1, 2, and 3. So if we are having this retracement and it happened to come back to 61.8, before I get there, let's also look at the coordinates. You can set that one, by yourself, and then the visibility. You can change some other things right here, okay? And on the style, you can change. You can use one color, which is blue. So people like using multiple colors, and I don't know why. You can increase the background to be thick, but I prefer it to be transparent, just like that. I prefer it to be transparent, just like that. Don't reverse it, it's not necessary. Leave it like that. Prices. Now I allow the price to be there because I want to know the levels where it is on the market without having to check it myself. So this is this point of the market, 1.5. So the price is there, okay? And then I change my levels to percentage, not values. Values should be 0 point. I don't want to have that. I prefer that percentage. So you have that right here, and then your label is on the right, on the top of your line, okay? So we have that set. So if the market retraces to our 61.8, we could have a pending order waiting for us there at 61.8, and you have I can't do more than 15 pips. But if I wanted to, I'll put it right below this guy here, which is actually too much. But we are taking our entry from here. We should have only about 20 pips. We don't need the whole pip stop loss to do whatever. Just very little pips. Or you could use below this guy right here. Let me zoom that in. Below this rejection right here as your stop loss. So if the market retraces down to this point, which I will be looking at, we'll have our first take profit We have our first take profit at zero. At the zero level, the market might want to come and complete this. This will be our take profit 1. Here will be our take profit 2, and the top here will be our take profit 3. All right, so this is how we use our Fibonacci to calculate retracement. So if the market retraces down to this point, then we know what to do. And if it doesn't get there, it might reach here and retrace from here. You can decide to use the same stop loss or use a smaller stop loss. I would rather use a smaller stop loss with smaller lot size. Yes, I'll use like 10 pips. If it hits here and goes, then it goes. If it goes against me, then I will take that small loss and have another entry at 78.6. 7.6, because I feel the market is actually on an uptrend. So if I have up to 10 pips in for in profit from 61.8, then I can go to a smaller time frame, catch another retracement, and see if we are going to be loading it up for further buys. And if it takes us out, we'll come and be looking at this 78.6 zone level for our new entry. So that's it about using the Fibonacci, guys. And I want us to be better this year. I want us to know what we are doing more. So, like I always say, guys, let price action and the candlestick always be the judge. Kindly subscribe to this channel. Drop a comment on the videos you want us to do next and topics you want us to handle, and then share this video. Peace out, guys. Always from the Williams FX.